Good morning and welcome to your daily intelligence briefing. So here's what we're covering today. We're going to start with the escalating crisis in the Gulf and what it means for India. Then we'll jump into some key updates on the economy and politics. After that, we'll look at what's happened in the corporate world, hear from some experts, and we'll wrap it all up with the market close. Let's dive in. Okay, starting with our lead story, the war in West Asia has really spilled over, and it's now causing some major disruptions to shipping and energy, with India right in the middle of it. Things are moving fast here. Iran has reportedly attacked commercial ships in the Persian Gulf, and this is critical for us. An India-bound cargo ship, the Mayari Nari, was hit in the Strait of Hormuz. It was on its way to Kandla, and now 3 of its crew members are missing. You can just imagine the ripple effect this one attack has caused. We now have 28 other Indian-flagged ships, with 778 of our seafarers completely stranded in what's becoming a very dangerous region. The financial shock from this has been immediate, and it is huge. 21.95 trillion rupees. That's how much investor wealth has been wiped out from BSE-listed companies since this war kicked off. It's just a staggering number, and it really shows you how nervous the market is about all this. And this one highlights a massive vulnerability for us when it comes to energy. 90%. That's the share of India's LPG imports that travels right through the Strait of Hormuz, which is now, of course, disrupted. It just goes to show how much we rely on a single, critical choke point for our national energy supply. Now, in response to the supply shock and the crazy price surges, the International Energy Agency is stepping in. They've announced a record release from their reserves. They're putting 400 million barrels onto the market to try and calm things down.
And you can see here, the consequences are just cascading through the economy. I mean, the fallout is everywhere. Our market indices are taking a nosedive, the rupee's getting weaker, and airlines are scrambling to find new flight paths, which just drives up costs. Industries like ceramics are getting hammered with higher prices for fuel. We're even seeing it at home, with more people suddenly looking into alternatives like induction stoves. It's affecting everyone.
All right, let's switch gears now and turn to what's happening on the domestic front. In our second section, we've got 4 key updates in macro, politics, and governance. First up, in Parliament, things got a bit heated. The Lok Sabha has rejected the opposition's move to remove Speaker Om Birla. This all came after proceedings were disrupted by protests, pretty much turning the whole session into a procedural showdown. Next, we've got a really significant decision out of the Supreme Court. They're trying to put the right to die with dignity into practice, and they've directed that the term passive euthanasia should no longer be used. Instead, the official phrasing is now withdrawing or withholding of medical treatment. This is a big deal. It sets up new legal language for end-of-life care. Meanwhile, the government is getting into administrative mode to deal with the energy shock. The Home Secretary is telling states to secure all their LPG infrastructure, keep a close eye on daily supplies, and, importantly, to shut down any false rumors about shortages. They're also cracking down on hoarding. It's really a multi-pronged approach to manage both the actual supply and, public panic.
Now, this is interesting. Looking at India's macro position, our growth is still solid, but we're definitely exposed to what's happening globally. In the latest emerging markets tracker, we've actually slipped down to 5th place. And you can see why. While our growth is robust, the falling rupee and a dip in market cap pulled our ranking down. And just look at Vietnam, sitting at number 1. They posted some incredible numbers for GDP, exports, and market cap.
Okay, moving on to the corporate sector. As you'd expect, we're seeing these big geopolitical and economic shocks hit businesses directly. The markets are definitely feeling the pain. The Sensex dropped 1.72%, and the Nifty was down 1.63%. But the number that really tells the story here is the spike in volatility. The India VIX index, which a lot of people call the fear index, shot up over 11%. That's a clear signal that investors are bracing for a bumpy ride ahead. Now, check this out. It's a bit of a different story, away from the crisis, but it's fascinating. We're seeing a major generational shift in who's putting money in the bank. The share of deposits held by savers under 60 is actually going down, while the share held by those over 60 is going up. It seems pretty clear that younger savers are looking at other options, like stocks and mutual funds, and that's fundamentally changing how banks are structured. This chart just shows you how fast the conflict in the Gulf is hurting industrial costs. Take ceramic makers, for example. They depend on natural gas and propane. Well, those prices are up 8.3% and a whopping 18.7% respectively. And that's just this year. That puts incredible pressure on their profit margins. And we're already hearing about production shutdowns in Gujarat's big ceramic hub. But, even with all this global volatility, big money is still moving. We're seeing SBI team up with Japan's MUFG Bank to finance some major projects. And over in the US, Donald Trump just announced plans for a new refinery that's backed by Reliance. So it just goes to show you that these long-term strategic investments are still happening even when everyone's feeling a bit risk-averse.
Next up, let's see what the experts are making of all this. Returning to the opinion pages, and a couple of key arguments really stood out. First, Madhura Swaminathan and Arindam Das are making the case that women's role in Indian agriculture is just too big to ignore anymore. But they say their work is still systematically undercounted and they're not being paid fairly. And this quote just sums up their argument perfectly. They write, "Women sustain India's farming economy, while the state still fails both to count them correctly and to ensure decent wages and worker rights." Wow, that's a really powerful conclusion that demands some attention from policymakers.
The second editorial takes on something a bit more technical, the National Statistical Office's recent rebasing of the GDP. The authors think it could be a really important correction, but they argue that for it to be credible, the NSO needs to be way more transparent about how they did it. Basically, they're saying we need more disclosure to settle the debate around India's national data.
And finally, let's wrap this up with the verified market numbers for March 11th.
So at the closing bell, the Sensex stood at 76,863. That's down 1.72%. The Nifty 50 closed at 23,866, down 1.63%. The rupee lost 16 paise, settling at 92.01 against the dollar, and volatility, measured by the VIX, was up over 11%. But really, the biggest takeaway from today's market action is that cumulative loss of almost 22 trillion rupees in investor wealth since this war began. And that leaves us with the final question, right? How much more of this can the markets take before we see some real signs of de-escalation?